invite Ms. Neha T, research analyst, aluminium value chain. Neha is a research analyst at Pigment, where she closely tracks the aluminium value chain with a focus on primary aluminium scrap flows, secondary alloys, and downstream market developments. Her work centers on analyzing price trends, supply demand dynamics, and evolving trade patterns, while engaging actively with market participants across the aluminium and recycling ecosystem. She brings value on ground insights into the rapidly evolving aluminium market. We are delighted to have her with us today to share her perspective on the sector. Neha will walk us through the current price trends, primary versus secondary dynamics, and how India's demand momentum is reflecting in the value chain. Neha, please take us through the numbers and market signals as well. Over to you, Neha.
Thank you, Veena, for that introduction.
Yeah, sound
I hope I'm audible.
not clear. Okay.
So before we dive into the presentation, let me just take a minute to tell you what Pigment is all about. So Pigment is a trusted platform that provides price reporting, market intelligence, and consulting specifically for commodities. We cover a wide range of markets like ferrous, non-ferrous metals, coal and energy, scrap recycling, logistics, and agriculture. Our services include price indices, future data, news and insights, reports, tenders, events, consulting, and even price forecasting. So here's a quick overview of what we'll be covering today. First, we'll look at how global events, specifically the tension in the Middle East, have impacted the aluminium prices and supply, and how these changes are affecting the Indian markets. And then we'll get into the India's demand story and what key factors to watch in the coming months that could shape the prices. Now, moving on, before the recent geopolitical development actually got in, so the aluminium prices towards the end of 25 itself moved upwards. This was majorly due to the supply constraints. Now, in Europe, several smelters remained closed because of higher energy costs. This was limiting the production from that region. And apart from this, there were also smelters that were put into maintenance because of not being able to uh, secure a contract of power. And at the same time, China's production cap restricted the possibility of bringing additional capacities online. And now, if we look at the demand side, sectors like construction, transportation, and energy transition projects continue to support the aluminium consumption. And another important factor was low global inventories, which dropped almost 15% on a quarter on quarter basis. So, this means the market has very little buffer in case of any disruption. And as a result, LME prices moved close to almost $2,800 per ton by the end of 25 itself. So essentially, the markets were already tight even before entering the new year. Now, moving on, the current hot topic. So, particularly towards the end of February and the early March, rising tension in the Middle East created fresh uncertainties in the global commodity markets. And one major development was the closure of Strait of Hormuz, a key shipping route that plays a crucial role in global trade. So, this disruption affected several sectors, including energy, fertilizers, metals, and especially aluminium. So, why aluminium? Because the Gulf region accounts for nearly 8% of the global aluminium production. So, supply concerns began to grow. And smelters in the GCC region, like Alba, declared force majeure, and Hydro did the same for Qatar aluminium shipments due to gas supply issues. Now, looking at Japan, the Q2 aluminium premiums are still under negotiation, with a major producer offering up to $350 per ton, which is up by 40% from the previous offer levels, and which is also the highest level since Q2 2015. With inventories already at lower levels, these developments have been pushing the prices higher. And LME has also currently surged and it's breached $3,400 per ton. And if these disruptions continue, prices could move towards $4,000 per ton. Now, moving on, global market movements are now reflecting in the Indian aluminum market as well. And primary aluminum prices in India have been rising consistently following the trends on LME. And India almost produces 4.2 million tons of primary aluminum, and despite which it also imported around 0.4 million tons of ingots in 2025, which includes alloyed and non-alloyed from other countries. And out of this, around 30% came from the Middle East region. So any disruption in that region tightens the domestic market. And in fact, maybe reduced imports could support the domestic producers by increasing the demand for locally produced aluminium as well. However, the producers are also facing production costs, particularly due to rising coal and gas prices, and because of which the domestic aluminium prices have already increased by around 25,000 to 35,000 rupees per ton. And now coming to the downstream manufacturers, the situation has become even more challenging. Primary aluminum prices have increased within a matter of days, rising the raw material costs. Energy availability has also become a very big concern. LNG supplies are currently around 80% of the contracted volumes, and sourcing alternative fuel could increase finished product cost by up to 20 to 25%. And at the same time, the UAE port closure has also disrupted exports for some Indian downstream manufacturers who ship large volume of their production to the Middle Eastern markets. Now, when we look into India's secondary aluminum segment, we are also seeing a very strong price movement there as well, especially in secondary ingot grades like ADC12, which is majorly used in automobile components for making engine housings and etc. And these notable price gains are because of rising aluminum scrap prices, especially in early 26. And on the other hand, ADC12 imports have also seen a notable drop of over 60% on a year-on-year basis due to BIS related issues in early 25 and landed costs being at par with the domestic prices in early 26. And at the same time, automobile sales have also seen an increase after the GST changes in September 25, which further supports the demand for ADC12. And another key factor shaping the increase is the availability of scrap. Now, scrap imports have consistently seen a decline starting from October 2025, which was at 0.2 million tons to about 0.13 million ton by January 26. And this was majorly due to the rising LME levels, currency pressures, along with the Middle East conflict adding on. The freight rates rose, transit times have become longer, keeping scrap imports currently very subdued, and has tightened the domestic scrap market and pushed the prices high. Now, if we look at aluminium demand story in India, the short-term disruptions are currently influencing the market trends, but the long-term demand looks quite positive. It looks very strong. And India continues to be one of the fastest growing economies with GDP expected to grow at around 7% by FY27. And this economic growth will definitely support the demand for industrial metals like aluminium. Currently, India is the second largest aluminium producer and the third largest consumer globally. But however, the per capita consumption in India is only about 3.1 kgs compared to the global average of around 12 kgs. And this gap shows the potential for future demand growth. Now, the key drivers would be urban infrastructure development, expansion of power transmission networks, growth in renewable energy projects, electrical vehicle adoption, and other major sectors that use aluminium. And because of these factors, India's aluminium demand could reach about close to 10 million tons by around 2030. So looking ahead, aluminium prices in India are likely to stay firm, supported by the tight supply, China's production caps, and ongoing disruptions in the Middle East. LME movements will continue to guide the domestic prices as well, while slow scrap availability may keep the secondary aluminium market elevated. Although new capacities in Indonesia may come later by around end of 26 to maybe between 2030, the market is expected to remain tight and will be interesting to see how the market responds to these emerging trends. And to take these discussions further, Bigmint has brought together a dedicated platform for the industry. We will be hosting Bigmint India Non-Ferrous Week 2026, which will take place on 9th and 10th June in Mumbai. This event will bring together key stakeholders across the non-ferrous metals and recycling value chains to discuss market outlooks, emerging trends, and opportunities in greater detail. For those who are interested in exploring these topics further and connecting with the industry participants, you can find the registration and event details in the link shared in the chat box. So looking forward to see you all there. Thank you.